Okay, this is the last speech for the day. And the next speaker is Stevan Radonjanin, I'm sorry. He's the co-founder and CEO of a crypto investment platform, Bally. And prior to entering the world of crypto, he completed a master's degree in quantitative finance and worked in banking for 5 years. And he'll talk about the title of his talk is Unleashing the Power of Data-Driven Crypto Investing.
Thank you very much. Can you guys hear me well? Perfect. Okay. So, as Philip said, my name is Stevan, and today I will talk about my data science journey, how I got into data science and how I drifted apart from it, and then found my way back to it through the crypto industry. I will talk a little bit about how I connected my two passions for data and for crypto, what kind of product we have built at Valley, why we have pivoted slightly, and what is coming next. Okay, probably this one. Yeah, as Philip briefly mentioned about me, I studied masters in quantitative finance, and during that time, I used to deal with data a lot. For my master's thesis, I actually created an algorithm which was optimizing the portfolio of 100 largest US stocks based on conditional value at risk in order to try to beat the crisis or to reduce the impact of crisis by investing in certain segments of the market which were not as much impacted by the crisis. After that, after my master's program, I drifted a little bit apart from data science and started working more with people. I started working first 5 years in banking, and then the last 5 years I've been working in the crypto industry as head of business development for some of the largest European crypto platforms. Today, I'm the CEO and co-founder of Valley, and at Valley, we have built a crypto investment app to help people who don't have the time or knowledge to analyze the markets and follow the markets, but that also want to invest smartly into crypto. We created an automated way to help them achieve this. A little bit about before we get into the main topic of today's presentation, our crypto investment strategies, I want to talk a little bit about the crypto returns. So even though cryptocurrencies are built on really revolutionary technology and they solve a lot of problems such as financial inclusion or cheap cross-border transactions 24/7 and so on, one thing that got people interested in cryptocurrency are the phenomenal returns that they provide. So for example, if we look at the past 10 years, investing, for example, 100 euros into a real estate fund would have yielded in 10 years 243 euros. If we invested the same amount into the stock market, for example, an ETF tracking S&P 500 index, we would have achieved 370 euros. If we invested the same amount into Bitcoin, that would have resulted in 15.6 million euros. So the returns are great, but a lot of people are saying, okay, what about the volatility? Because we know that crypto is quite a volatile asset. So if we look at a Sharpe ratio for cryptocurrencies, basically everything above 1 in terms of Sharpe ratio, so risk-adjusted returns, is good. Everything between 1 and 2 is quite good, and everything above 2 is really good. So looking at a 4-year holding period, we can see that Bitcoin performed much better than any other asset class out there, stocks, bonds, real estate, and so on. To be honest, I think they are backward looking. So now we come to actually the main topic of today's presentation, and that's crypto investment strategies. So what we try to achieve here is to look at different asset classes in the traditional finance and look at the returns, drawdowns, and so on that they offer, and then create something similar in the crypto market. So we have a risk category which is similar to bonds, where we try to achieve up to 20% maximum drawdown. Then one which is similar to gold, real estate funds, and large cap stocks, where the drawdown is up to 40%. And then one for emerging market stocks, where the drawdown is up to 70%. And then we have one which is riskier, which corresponds to 100% being invested in crypto, which has drawdowns even higher than 70%. So how did we start? We had an initial idea to create kind of investment strategies which are like broad crypto market indices, and also some which follow certain category in the market. For example, DeFi or NFTs or something like that. But we were actually thinking about who our target persona is, or like our ideal investor, and that is somebody who wants to invest smartly long term. So we basically decided not to go for such categories, such as DeFi, NFT, because they are hot at certain point in time, but they might not be the ideal kind of investment long term. So we actually decided to divide, as mentioned previously, all our investment strategies into 4 different risk categories, and in every category to offer 2 choices so that people can choose basically what they want to invest into. Now, from that process, we try to create investment strategies in such a way that when somebody looks at the offering, they can see the different annualized returns, past returns. They can see the risk levels of those strategies, and they can see constituents of the strategies so that they can make an educated investment decision. To dive a little bit deeper into the strategies, the stable Bitcoin strategy has 10% invested in the largest cryptocurrency on the market, Bitcoin, and 90% in a stable coin which is tied to the value of US dollar. Stable 4 coins has also 10% in crypto, equally in Bitcoin and Ethereum, and the other 90% equally in a token tied to the value of gold, and half to the value of US dollar, to basically balance out the crypto part and offer something for conservative investors. Next is the Balance ETH, which is a strategy having 25% in Ethereum and 75% in stable assets. Next one is the Balance Top 5, which attempts to invest 30% of the portfolio in a selection of blue chip cryptocurrencies. So the 5 largest cryptocurrencies by market capitalization, and the remaining 70% in those stable ones. After that, we have the moderate top 10 strategy, which invests in the 10 largest cryptocurrencies by market capitalization, 70% and 13 stable assets. But this underlying strategy, which invests in the top 10, is optimized based on equal risk contribution. That means that every asset in that portfolio has a weight in such a way that it equally contributes to the overall risk of the portfolio. Next, we have the moderate momentum crossover, where 70% is invested into coins, 10 coins, which are at the moment exhibiting the highest momentum. So we're trying to automatically offer people the possibility to invest in those coins which are kind of trendy at the moment, and to capture part of that growth. Next is the exotic altcoins, where 100% is invested in 25 alternative coins, so not Bitcoin, but other cryptocurrencies. And this strategy exhibits higher returns, but also higher risks than the other ones. And last but not least, this is quite an interesting strategy called Bitcoin Altcoin Season, where we try to capture the idea that within the crypto market, we have a certain, let's say, trend that when the bull market starts, people are mostly still invested in Bitcoin. But during that growth, there is some kind of momentum shift where majority of investors try to go into riskier assets, such as altcoins, to achieve some additional return. And with this strategy, we offer them automatic way to achieve this. And the same way, the other way around. So when the market is basically crashing or going down, we try to go into a safer asset, which is Bitcoin, because typically it experiences lower drawdowns than the riskier assets. In terms of the data, we initially looked at where we can get the data from. There is some reliable source, and CoinGecko offered data from various exchanges. They aggregated it, and we looked at data from 2015. Back then, there were less than 600 cryptocurrencies on the total market, and today we have more than 10,000 cryptocurrencies. So instead of analyzing 10,000 cryptocurrencies, we had to come up with an investment universe that makes sense for our investors. And our investors are not people who are, let's say, gamblers or those that want to make quick trading gains, but somebody who is more looking at making solid investments long term. So we limited our investment universe to the top 50 cryptocurrencies by market capitalization. And this was perfectly enough for what we wanted to achieve, because even these 50 coins are exhibiting phenomenal returns. One thing that we excluded was the meme coins, the so-called Dogecoin, Shiba Inu, and cryptocurrencies like that, because they're very trendy at certain point in time, but long-term, they're not ideal for our type of investor. In terms of rebalancing, we try to create the ideal offset between rebalancing too often so that the fees accumulate and that the investing in this strategy is not very profitable. And on the other hand, trying to stay, let's say, current with the market, so that, you know, if you rebalance once a year, a lot can happen during that period and you might miss out on certain things. So we decided to go for monthly rebalancing. Also, we had to look at what type of fees we want to charge and how much. So we also had to check what the competitors are doing, also how much we can charge so that the business remains profitable, but also that users have good returns which are not crippled by too high fees. So we decided to go for 2% asset under management fees and 0% performance fees for passive strategies. On the other hand, for smart strategies, which I will talk a little bit later about, we decided to go for 10% performance fee to charge, because we have more, let's say, active management here, where we charge on high watermark basis, meaning that if the strategy is making profit, we charge a small cut. If the strategy drops until it reaches the last highest level, we don't charge anything. So briefly, what are the smart strategies? The passive strategies typically go up and down with the market, whereas those smart strategies that we created, we attempt to enter the market early when prices are relatively low and exit the market, let's say, gradually over a period of time when the prices are getting high. So to achieve this, we have looked at a number of indicators from Glassnode. I believe we analyzed more than 100 indicators. And we selected a combination of those that are perfect for what we're trying to achieve. So basically the idea is to have an automated way to invest like those experienced whale investors are investing, as opposed to retail, because retail typically buys on the top, sells when prices drop and so on, and large institutional investors do the opposite. And we try to come up with these smart strategies with a way to automatically invest like those institutional investors. So one of the first factors that we took into account when constructing these proprietary indicators was Bitcoin halving. This is single-handedly the largest and most significant event in the entire crypto industry, which happens every 4 years, where the reward given to the miners is cut in half. What that means is that the amount of new Bitcoins is reduced or the rate of inflation is reduced. And with a constant demand, basically the price starts appreciating. And then if you can look at the graph, you typically have 2 years of period of growth called the bull market, and then typically 2 years of decline called the bear market. So that's kind of something that experienced investors know and that those retail investors that are just entering the industry don't know, which is why we created this whole smart strategies. Apart from that, we took also certain indicators for the top and the bottom of the market. For the bottom of the market, we looked at the price, the ratio of the price at which all Bitcoins in existence were bought and price at which all were sold. And whenever you see the green line, whenever that ratio was getting to these low values, we, after that, had a period of growth. So whenever it's hit, those strategies automatically start getting into the market, but not at one point, but over a course of months. Similarly, for the top, we usually look at the time that has passed from the last Bitcoin halving, and we start gradually selling. And if we have not sold until the moment when these moving averages cross each other out, at this point we sell the remaining part, because that's usually when some kind of market crash starts happening. So in what kind of results did what results has this yielded? Basically, if you look at the returns and the drawdowns, the smart strategies typically experience significantly lower drawdowns, especially for those high-risk strategies where this volatility is much more pronounced. And also based on that, in the long run, also the returns have improved. So to see this and an example, if we look at, for example, the top 5 investment strategy, you can see that the passive strategy, the blue line, has a certain performance where, it goes significantly up, but also drops, like, it might be a high number for the drawdown. But as opposed to that, our investment strategies, they start divesting on the way to the top. And basically, maybe you lose a little bit of return there. You don't hit the top, but at the same time, you would not experience such huge drops. So basically, we invest in an automated way, similarly to how those whales are investing, where the graph typically looks almost like a step function. So this is good, and those investment strategies are interesting, but the question is, how does an investor select an investment strategy which is suitable for him? So to solve that, we came up with a quiz which should help the investor basically decide for themselves what do they want to invest into. So typically, we give them a set of questions where they can say, for example, I want to achieve 500,000 euros in the next 5 years by investing 5,000 today and 500 euros monthly over that period. And I'm willing to take higher risk to achieve this goal. Then, based on the strategies that we constructed and the past returns of those strategies, first, you can see whether this goal is at all achievable. Because, if you want to make 1 million by investing €1 today and make that return tomorrow, that's not possible. So based on all these selection criteria or the answers that he provides, he can see whether there is a matching strategy that corresponds to his answers. Now, last year when I came here, I basically presented the idea for our investment app. Today that app is a reality. People are trading, investing a lot of money. We have currently, I believe, more than 1,000 users. But in that process, we have realized one thing, that we want to go more into B2B direction. So we decided to make a small pivot. How did it happen? We had a conversation with multiple financial advisory houses, and we realized that there is no reliable platform for them to manage the crypto portfolio of their investors. So what we're doing now is we're creating a web portal where they can do exactly that. Invest in crypto on behalf of their clients. That's something that we're about to complete in the next 1 month and then launch it and start onboarding first advisory houses. Another thing that we're working on is recently we have acquired one company which has a large number of clients which invested in tokenized assets. So we are in the process of basically merging these businesses and getting their clients and also, I believe, 8.5 million euro assets under management portfolio in tokenized assets. And this acquisition will basically give us the necessary know-how and everything to be able to offer tokenization services to other businesses. For example, currently we're in talks with various companies in the real estate space, trucking, brokerage for tokenizing equity, private equity for them, and so on. And one thing that we can offer them that no other tokenization basically platform can offer them is the ability to sell their tokens. Majority of tokenization platforms are offering the technical solution to mint the tokens, burn them, but not many have access like we will have with this advisor portal to a pool of financial advisors that can actually offer those tokens to their clients. Why is this tokenization really interesting? Because this will give us the opportunity tomorrow to kind of diversify the investment portfolio. So not only invest in crypto, but actually construct investment strategies which consist of various assets, including tokenized real estate, tokenized art, tokenized private equity, and many other things. One more thing that will be focused in the next year is offering our investment strategies to other crypto brokerage platforms. When we were at one conference, we were approached by a crypto broker which said, guys, we really love your investment strategies. How can we have something like this? And from my previous experience in the past crypto brokerages that I worked, I know, and also through the process of us constructing investment strategies, we know how lengthy process that is and that they most likely don't have the expertise to do it. But I also knew that they don't want to lose their clients by bringing their clients to another platform. So what we came up with is an API through which they can offer our investment strategies to their users, where their users don't leave their platform. So basically, if their user wants to invest 1,000 euros into certain investment strategy, we would be sending the orders. Let's say if 50% is invested in Bitcoin, then 500 euros order to invest 500 euros in Bitcoin, I don't know, 30%, 300 euros in Ethereum, and so on. Also, once a month, we would be sending an order to rebalance the portfolio to bring the portfolio weights to the target levels. So I know this was the last lecture for today. I hope I didn't bore you too much. I might not be really excellent at public speaking, but what we are good at is building cool products. So if you would like to try out our investment strategies and invest by yourself, you can download the app using this code. And yeah, thank you very much for your attention. If somebody has questions or wants to let's say, establish some partnership, invest, or whatever, feel free to approach me also afterwards. Okay, yeah.
This is mostly historical question from my side about the halving. How many times did it occur? And was the always result like huge increase in cryptocurrency values, you know, about the Bitcoin or any other, let's say, cryptocurrency?
Okay. That's a good question. I believe it occurred, so if it's every 4 years, I believe it might be 4 times. And because the market capitalization of Bitcoin is increasing, it's much harder now to move the market than it was back then, from cents to now thousands and thousands of euros per Bitcoin. Back then, we had really huge increases. I don't want to lie to you, but it might be 500x or something like that. Now, in the last bull market, I believe, what it went, I think from 4,000 to 69,000 or something like that. So still quite lucrative returns, but not nearly as before. So as the market capitalization of Bitcoin is increasing, that return is shrinking.
Okay, thank you, thank you.
You're welcome.
Hi, Stefan. Thanks for the talk. So I have a couple of questions. It's not a secret. How much AUM do you have? And also, is Valley kind of registered as a brokerage offering structured products, or it's registered as a fund? So you basically have a portfolio manager who is rebalancing all those strategies and managing users' funds. Yeah.
Sure. So currently, as we recently launched, we don't have a huge number of assets under management. And now with this acquisition and bringing those financial advisors, that will get more and more. What was the second question? If we are a broker, yeah. So yes, we are a crypto broker. However, we more or less act, I wouldn't call it affiliate, but we are acting under the license of our white label provider. So they have, they're a licensed European company, and they have their own compliance team. They have connections to banks, to credit card providers, to liquidity providers, to KYC providers, and so on. And basically everything that happens in the background happens through them. Everything that you see, the mobile app and so on, that's something that we have built.
And it is only kind of intention for to be used and for retail traders, or you would actually go and approach, when you said that you're going to try to do B2B kind of deals, but yeah.
Exactly. So basically the focus now in the coming months is more going after financial advisory house in Europe, onboarding them and their clients, and after that, this tokenization and strategies via API. For example, some of these platforms, crypto brokerage platforms we spoke to, they really like this idea to basically expand their product offering by including investment strategies in it, because most of them only have individual coin trading. So this would be like quite an attractive product. And some of them have, I don't know, 5 million or 18 million users. And for us to get that through this B2C approach, it would require millions and millions of euros in marketing budget. And here with just one connection, you get access to millions of users. And it's more or less, free of charge for us. So that's kind of the approach that we will take.
Perfect. Thank you.
Thank you. Yes. You can use that. Thank you very much, everyone.